Hello, this is Coach Mike from winningstockcoach.com. Going to start out on our market overview for the week ahead beginning October 20th, 2014. We've had an interesting couple weeks in the market. I'm sure everybody who's watched the news has seen really the biggest pullback we've seen in the markets the past few years. We kind of entered that quote-unquote correction territory, which has left many people very, very scared in general on the markets. Now, I do want to tell you that, keeping things pretty simple as far as technical analysis goes, even though we've been in a pretty steady uptrend and, maybe is it possible we see that trend change? Yes. We do need, quite simply, both a down and an up move before we're able to assess any new trend. So that's one thing that's very, very important to understand moving forward this upcoming week. With that being said, we're going to start out here on a weekly chart of the SPX, that's the S&P 500. Last week we talked about a couple potential pullback targets, 1884.61, 1863.62. Yes, we got lower than that, but the weekly candle was still able to close above it, which is really what we're looking for when we talk about these targets. Now, the particular candle that was made for the week last week is known as a hammer candle, and though not always, it is a candle that is known to make a bit of a reversal should you continue in the opposite direction on the next candle. Now, what I want to show with that is, even though this candle was red for the week, meaning it closed the week below where it opened, it still has this large lower wick, which means as it fell, the buying pressure that came in exceeded the selling pressure to cause the price to go up. Now, we saw hammer candles in a sense here for the week of February 3rd. We saw a hammer candle here for the week of October 7th of 2013. And we've seen them, if I go back on a 5-year weekly chart, we've seen them a few other times and seen a reversal off of it. Now, ironically, with that being said, the times that we've seen a reversal off of it from a bottom, that hammer candle has had a green candle body, which would indicate that the week closed higher than what it opened. If we go back to the last red hammer candle, that indeed gave some sense of reversal, or at least made a bit of a market bottom, we would be back here in 2011, the week of August 8th, 2011, where we actually had quite a similar trading pattern with this higher level consolidation and a very abrupt fall before the week that gave the red hammer. Now, the following week, you can see, even though it did not make a lower low in overall price, it wasn't a good week still. But with the exception of one little market dip, which was actually just a 1 or 2 day period that caused the lower wick on the 10/3/2011 weekly candle, we had pretty much made a bit of a market bottom. Now, for this area of the chart gives a very good explanation to the point I'm trying to make and what I'd really like to see you guys watching out for. First of all, we have to identify that we had a market pullback late July that settled down the first week of August. That market pullback led to a higher high, and that market pullback was a higher low than our prior market pullback that we saw in April or in February. So we had a higher high, or a higher low, that made a higher high. That's something very, very simple, but very, very common as a technical trader, of helping you with simple expectations on the chart. Because the majority of the time you see a higher low made, you'll get a higher high. And the majority of the time you see a lower low made, you're going to get a lower high. Now, as you can see from our August pullback to our current pullback, we've made a lower low on the weekly chart from the last market dip. And that's a clear market dip, even though it was only the one red candle. It was a time where you clearly gave up a decent amount from the highs before moving again upwards. So there is reason to believe that the next high the market may see on an up move will actually be lower than the previous high. If that is the case, we will see this uptrend that we've been in begin to diminish and really work its way into a bit of a downtrend. Now, the funny thing about where it came to, I had a couple trend lines here, and if you remember this purple dotted channel that I've been talking about for quite some time, this channel began at the inception of QE3, which is what we've been tapering from. This gold-colored channel was one that was set with QE2. There is more than one quantitative easing program. That's one thing for people to understand, is the tapering of QE that we've been seeing and hearing discussed in the news and such has been the third QE3, the $85 billion bond buying program by the Federal Reserve. And now that has come to a point of end, or expected to come to an end in October this month, we've kind of made our way back to that QE2 channel, which actually makes a little bit of sense. You get rid of QE3, you come out of the QE3 channel and go back to the QE2 channel. So that does make sense to think that the markets could work its way back into an uptrend, even though it's made a lower low. But the thing I want to go back to this area in the latter half of the year of 2011 for is, as you can see, when the lower lows were made on the weekly chart, we got an up move that gave us a lower high, and it was the subsequent down move, which gave us a higher low, that gave us the opportunity and encouragement as well as confidence to take new longer term positions. In fact, if the market comes up and makes that lower high and does not hold a higher low, we could begin to see a complete change in the trend that would have us not wanting to take long-term investment positions to the long side. And this is simply, again, just a simple means to protect yourself. Sometimes it's best to have a long-term approach at your trading, as we've seen over the past few years. Sometimes it's best to have a short-term approach to your trading, which is what we've seen over the past couple weeks. And with that being said, you pretty much are going to see me personally, for members of the coaches roster in our chat room and such, you're going to see me not really doing a lot of longer term entries until I can assess if that next high is lower or higher, and if the pullback from it, because nothing goes straight up or straight down, if the pullback from it gives a higher or lower low. At that point in time, I'll assess the long-term or short-term trading sense and allow that to dictate the types of positions I take. Now, as far as a couple targets go for the SPX, we already made quite a decent move off the lows for the week. I'm going to switch over here to a daily chart, and you're going to see from the low of the week on Wednesday, Thursday was kind of an inside trading day, but Friday made a decent up move. I do think it's very possible that we continue an up move, probably close to around this 1935.14. Switching back to the weekly chart, you see this green trend line that we had clearly failed, that held our bottoms for the past year and a half. Many times for trend line traders, you will see that when your trend line has failed, when that support level has failed, you will come up to a point where you actually retest that line, which would mean you hit it again and pull back from it. Now, a pullback from that would actually be an opportunity to open new short positions, and if that high is lower than the prior high, would give you a validation based on statistics and what happens the majority of the time to think that you would then see a lower low, and you could begin short positions on that. So early in the week, I personally think it may be best, even though I think you could get a couple up days, sticking with shorter term trading mentalities, maybe doing some day trading on the moves that it makes. I think it's important to see first if it can break this 1935-14 area, or at least do more than retest this trend, maybe come back up above it, before you really get some feeling like it could continue to higher highs. And in that sense, stick with the shorter term mentality until the chart starts to shapen up. That shorter term mentality is going to protect us quite a bit, protect me, protect you in the trade decisions we make. It'll have you not looking higher than you should, so that you are aware of opportunities to sell that might present themselves. Now, I'm not going to sit and say that it's impossible that it makes a higher high, because as crazy as the stock market could be, that is always a possibility. But simply judging on what happens the majority of the time, I would hate to see you focusing on that as the only possibility that it will make a higher high, and miss an opportunity to profit on long trades for an upwards direction, because you simply didn't observe what the charts were actually doing. Now we're going to switch over and go over to the DJI chart. That's the Dow Jones Industrial Average. Pulling it up here on the weekly, you'll actually see this longer term channel that I've been covering for a little while, which, if I go back to the 5-year weekly, you can see it's held market bottoms, and has held those bottoms since October 2011. Now, even though it was only prices during the week or days during the week and not the close of the weekly candle that fell below, I want to point out that at no time during this period did we have any price that went below that particular channel. Now, as we kind of trim this down so you can see it a little better, I also want to point out that our longer term target, the 17,306.26, even though we went just a little bit above it, you can see that once hitting our target and closing below it, it pulled back from it. That definitely shows me a good amount of accuracy in our targeting. You can see that we had this low side target. This was from last week's market overview video of 16,103.08, and though it dipped below it, it did close above it. And we would want to make sure that any down move still closed at or above it, which means that's kind of what we're going to have to use as our support right now. And I think if we get a topside move, the first point we need to be looking for is 16,871.98. And even though there are some targets you might see above that, I would focus on the 16,871.98, because right now, to me, it seems like that would be the more probable expectation, because even if the markets were going to go on to make higher highs, it would be around that point that we may see a bit of a market pullback that gives us a higher low and an opportunity to buy long positions with better confidence and better aspirations for that trade. Switching over now to the RUT chart. This is the Russell 2000 Small Cap Index. Unlike our DJI and our SPX chart, we had already gotten to the point where we had identified a change in trend because we had lower highs. We had gone from our up channel to a horizontal channel with a double top, double bottom area. We then came and made a lower high and lower low. So even though last week was actually a pretty good week on the RUT that nearly got down to that 1023.97 target area I had mentioned in last week's video, I think that our more probable outcomes for a topside move will still result in a lower high. Either this 1117.01, I think it'd really be pushing it to get this 1171.49, but I do have it up there, so I'm going to at least mention it. But what I want to mention about small caps in the RUT, as opposed to what we see right now on the SPX and the DJI, which have now just only made their first lower low, is that identifying this change in trend on the Russell 2000 has made me confident personally that I don't want to be going in long in small caps, and that I would rather wait for the opportunity, even though that means allowing small caps to go up, to then identify a lower high and enter short trades for a downwards direction based on the lower high. And the reason I say that is the trend that's being set right now on this index is one in such that your highest probability trades will not be to try to play an up move in a downtrending stock, not knowing, where it's just a guess where the top might be. Although, should you wait for a high and that high be lower than the prior, even if you don't get the perfect buy price, so long as the lows stay higher, you would expect the lows to go lower, and the trade itself would be higher probability to produce a profit for you. So for small caps, even though we might see a bit of an up move continue, this is what I'm waiting for now due to the identification and the change in trend to enter short trades. You hear the term commonly in trading, the trend is your friend, or don't buck the trend. The trend is now set. You have to now allow for an opportunity for it to trade within the trend, make a new high that is lower than the previous, and trade it according to the trend. Now, I'm not just talking about the RUT chart as a single chart specific, or even the IWM ETF for the Russell 2000. I'm talking about small caps in general, stocks like Zillow, Yelp, and 1,998 others. To allow them to give you the opportunity to make the highest probability trade on them. Finally, going over here to the NDX, this is the Nasdaq 100 chart. We talked last week about the failure of this swing low and how it could lead us to our prior weekly chart swing high as a support point. Well, as you can see, the lower wick from the weekly candle came and bounced right off of that swing high point and made a decent move. Now, similar to the SPX and the DJI charts, what do we have from this low to this low? We have a lower low, which is going to have us anticipating a lower high. The first point we would anticipate is a retest of the failed swing low point here at 38.7967. And quite frankly, from the move down, it's almost there. If it were to hit that point and pull back from it, that would be a clear indication of the opportunity to enter a short trade. The other thing I want to identify is the tops over the past 4 or 5 weeks have given you this gold trend line, this down trend line. And that would lead me to believe that if we had a pretty good week this week, or couple weeks this week and next week, we could get up into this trend line before pulling back. Either of which scenario would be a clear indication to me that it's giving you a short entry opportunity. So over the past couple weeks with the pullbacks we saw, it's much different than other market pullbacks that we've seen over the past couple years. These pullbacks went harder and farther and really entered that correction discussion, got really close to that 10% down move. We've already seen the RUT enter a correction from its high because it exceeded 10% loss from its high. And that really has the need to say, or for me to say at least, that still I don't want anybody to be scared of the stock market. There's never a reason to be scared of the stock market. You should simply have a plan to react. You should simply identify when certain types of trading have a higher probability than other types of trading. For me personally, I've been one that focuses highly on swing trades and long-term investments, but I also do day trading at times, and I've identified that in the current market condition, the day trading is your more probable outcome. And that's what we've been focusing in our chat room on at the coaches roster with winningstockcoach.com. So that's kind of been our focus because that's what the market has given us. And that's kind of where we need to be even in the upcoming week. Because again, like I pointed out on the SPX weekly chart from before, the last time we had a major market pullback like this, even though we got a high move and it continued upwards over time, that move was still a lower high. And we'll go back to that chart one more time. And we will take this back to that period late in the year in 2011, where we got an abnormal size market pullback. We went up to make a lower high. And even though the market continued upwards, we were given a better buying opportunity by waiting for the next low to be made, identifying if it was higher or lower than the prior, and trading based off of that move. And the reason I say this simply is because if you really look at things where I was making that similarity from, that first week of August, second week of August in 2011 to this week with that red hammer candle, and how the following week went down, and even though it went up overall, if you look at this, you look at how many weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 weeks. From the times the lows were pretty well set, other than this one little dip, to where you would have actually had a comfortable feeling in your investment. And what I mean by that is, yeah, you would have had some ups and downs, ups and downs, ups and downs. You'd have gone up and then come all the way back down to where your previous entries were, which would have given you a very, very uneasy feeling, maybe even scared you out of the position, and made it so you didn't enter based on what the chart was telling you to enter on. So it'll keep you a tad bit safer, a tad bit more strong-minded, a tad bit more observant of the market conditions, to wait for those opportunities, because nothing goes straight up or straight down, as I've said many, many times before. Clear indication of that is all of these even intermediate style up and down moves that we've seen over the past 5 years. So as we approach the upcoming week, a shorter term trading mentality may be in your best interest. Take advantage of the daily moves that are given, and prepare for a time where an up move will statistically, more than likely, not give you a higher high. I didn't say it's impossible. I said statistically, more than likely, it won't. But the pullback from that may give you a higher low, and that will be your entry for new long-term investments. This is Coach Mike from WinningStockCoach.com, wishing you the best of luck in the upcoming week, and also encouraging you to have a plan for your trades, understand the market conditions you're trading in, and maybe check out the coaches roster at WinningStockCoach.com, where over the past few weeks of this horrendous market pullback, we've made quite a bit of money. God bless and good luck in the upcoming trading week.